All right, well, welcome to our week ahead broadcast. Let us go ahead and get underway with today's session. Anyway, great to see so many of you here. Epic turnout as usual. As always, all information is for educational use only. I'm not making advice about what to buy, sell, or hold. See, for example, people happily. It was a standing room only crowd, and they had to turn people away when I was doing the paid events for Money Show. I remember in New York, I said, live from New York, it's not Saturday night, it's our Traders Expo presentation. And everybody was there and clapped, and it was cheers and all that. But people cheerfully paid $329 for 3 or 4 hours of me. My all access pass, for only $12.97, you get 400 hours with me. So phenomenal value. Do be sure to register this weekend before the rates go up permanently tomorrow. If you think these are reasonably entertaining and useful to your trading experience, do be sure to register. There's me. Anyway, let's get on with it, Calhoun. Enough of this. Let's take a look at our markets. What's going on with that wacky S&P? Well, it's going downtown. We're at a 50 SMA support. As of today, or as of yesterday, at the 2930 area, we've got a bullish lower shadow here, so we may get a little bit of a bounce. Now, what happens after periods of volatility? You've got expansion and contraction. Just like the reason I'm not trading, I want to say ACHN, I could have that wrong, but the pot stock that gapped up yesterday, I don't trade, and that's one that I did not buy yesterday after the close because I don't pay up on a gap day. Often after a gap, you get a retracement, either to the middle of the trading range or it goes sideways or whatnot. Similarly, after a big market rally or a sell-off, you often get a mean reversion or a sideways congestion. So the market may bounce and chop around next week. We don't predict, we react, right? So as professional traders, our goal is simple. Make more money than we lose and make bigger winning trades more often, a way of life. And the way to do that is to focus single-mindedly on the high volatility candidates that have good trade ranges. I have found most of the cheap stocks that are heavily traded by amateurs do not produce nice big 40 or 50 cent runs. They have to be scalped for nickels or dimes. That's a stupid way to trade. A more professional way to trade is to trade instruments like Micron or AMD, or Twitter's been hot lately, or whatever that's got a nice 1 or 2 point trading range, of which your goal is to get maybe 40, 50 cents on a day trade, or if you're swing trading, looking for several points. Let me ask a quick question. How many of you, so I know how to focus today's presentation, how many of you are day traders? How many are swing traders? How many are both? Do please type in the word day, swing, or both. Or if you're lazy or tired, type in DS or B. But are you day traders or swing traders or both? Great to see 5,683 people have registered for these Saturday shindigs. My room only has 1,000 person capacity. Wow, big turnout today. So mainly both. I'm still seeing both. Okay, that's good to see. I'm taking a few small shots for swing trades, mainly in the inverse instruments, but also the pot stocks. Those are the two sectors I'm keen on right now, are the inverse ETFs like TVIX. I trade SOXS, I trade SQQQ, things that go up when the market crashes. That's what I trade, right? Because I like to go long. So a market does this. I'm looking for plays in instruments that have been beaten down and may be bouncing, whether it's UGAZ, Dust. Nugget was really strong earlier this week. I don't know how many of you guys were also trading Nugget, one of our gold instruments. A really big, spectacular run. I called it long correctly for my live room members on Thursday to go long if it got over 29.7. Epic win. It ran up 3 points, right? 29, 30, 31, 32, 4 points. Okay. I stand corrected. One of the things you want to look for, a pattern that I teach every single day in the live trading room, is an ascending bottom support pattern, and that's one of the reasons why I called it long. People always ask, how did you know it was going to run, and why did you set the entry where you did? The solution set for this, and all of my lame-ass competitors are frantically scribbling notes. Learn from a real trader. My competitors rip me off, and they're stupid. Anyway, I'm the real deal. Closing price is extremely important. Most people don't pay attention to that, especially the closing range. The open range, whether it's an open range breakdown or open range breakout, the ORB is obviously what we trade, but to prepare for that, there's 2 data points that set us up for successful call in the live room for a 29.7 call day before yesterday. Was I wanted it to get above the previous day's close. That's a recovery. Previous support is new resistance, so I wanted it to get above that. And also this ascending bottom pattern. That's, you got kind of a connect the dot anchor. We've got 2 pivots in a row. Double bottoms are okay, but double ascending bottoms, there's probably a dirty joke in there somewhere, but I won't go there. But double bottoms that are going up in a trend makes for a good sign to the street, and those are ace traders that buyers are coming in, and buyers are winning the battle. The bulls are winning the battle. They're climbing up out of the muck. So if you're a pivot trader, which is fine in this market, I've been rewarded handsomely in my profitable trades from trading pivots quite a bit this last couple of months now, and not just breakouts, but also doing pivot trades. But the key is they have to be capitulation plays. They have to be dramatically, I don't like the word oversold, but dramatically range dropped within a trading range. For example, another reason I said it would be a good play was it had been up at 34 and it was all the way down to under 30, down at 28.29. So that was due. My exit target was around the 31, which was a mean reversion, right? On the 2-day basis point, this is a mean reversion is simply something that drops. Well, actually, mean reversion play is where something drops and then it bounces back to the middle of the trading range, or it runs up. And it more often is something that runs up, it pulls back down to half, and then bounces, like right here. This is kind of sort of a mean reversion pivot. It runs up, pulls back down to slightly over half the range, then does a little pivot. Here, I was keen on getting us long because it was a good wide range, high potential trade setup. So those are the type of charts you want to focus on when you're looking for good trades in our current markets. Now, I don't know how many of you took my call last week in ENPH. Knocked it out of the park though, baby. Boom. Last Saturday. And for proof, look at my YouTube channel, the recording of this session from last week. Hopefully it'll record this week too. Anyway, I called it for you guys here. I said long if it breaks out to new highs. It did a nice epic gap from 21 to 27. Notice, please, as always, I say to sell the 9s. Right? You never buy anything at a 9 because usually that's a exit target for most of us who know how to trade. So a new high breakout would be indicated if it takes out highs above the upper shadow, and I use the whole numbers, so I'd wait till over 32. But anyway, if anyone took last week's call that I made for you guys, congratulations. Wow, thanks for the new orders. I appreciate that. If you have not yet ordered the All Access Pass, you might want to do that. You got to ask yourself, am I a guy you can learn from? Am I somebody you want to learn from? Am I somebody who knows what they're talking about and has some intelligence and focus and experience? And so that's important. When it comes to educators, it's important to buy the perspective that experience gives one. It's also important to buy from people who actually really trade and know what they're doing. So anyway, AGI, a couple of gold here. AGI is one that's small cap gold, and Eldorado gold, right? Eagle, another small cap gold. Spectacular profit potential, right? And I mentioned those to you guys last week. One kind of a poker tell visually to always look for is tall green candles. And you can see one of these parked up here at new highs. We're good to go. So those are a few for the next week to pay attention to as well as all the inverses. What else do we have? Wow, lots of comments and questions. Thanks, everyone. Day and aspiring to swing. I would do swing aspiring to day, but both are good. Oh, thanks, Fernando. Thanks, Mukesh. Hey, good morning, Dan. Hey, Dennis. Over here, let's see. Question. Both, but still with the day trading rule restriction from Hergen. Yeah, remember, there's a couple ways around that. One is don't use an overseas Bahamas broker or any crap like that, but you can always do a couple of different trading accounts. And in fact, if I had less than 25K, instead of the big six figures I got, but if you got less than 25K, you can open up a couple of different accounts. Of course, you can't trade them aggressively probably, but that'd be if I only had, say, $8,000 and I wanted to day trade, what I would do is split that into maybe 3 different brokerages, like maybe an Ameritrade. You couldn't do an IB account. Actually, one little known thing, you could fund your IB account with over 10K and then take back a lot of it and still have an active account down at, say, 2,000 or 3,000 level. So that's one thing you can do if you want to trade IB with less, or at least that used to be the case. But anyway, you can open up several different accounts, one with each of several different brokers, and you get your 3 trades in a 5-day window times however many brokerage accounts you do. So that's one way around it. See, this will be first day in my swing trades. Hey, Wendy, no, let's see, the link I sent you yesterday, Wendy, was for the day trading live room. The GoToWebinar did send the swing trading link to you. Send me a support ticket and I'll get you set up. So send me a support ticket right now, Wendy, and I'll get your swing trading, swing scans link to you, and that's the one to use moving forward. Just a quick note, for all of you who don't yet have Gmail accounts, email deliverability is spectacularly better in Gmail than it is using a ISP-based email provider. I find an increasing number of people that aren't getting GoToWebinar emails, and they're always, AOL or SBC Global or Comcast or whatever. Don't use your ISP-based email. Use Gmail. That's what I've been using to run my business over a decade. It works great. But anyway, to answer your question, send me another support ticket, and I'll get your link taken care of for you. All right, sure thing. Let's see, do I trade gold? Heard Russia abolished 20% VAT for private buyers. That's big news. That is big news if that happened. Yes, I do trade gold. I like trading nugget and dust daily, so that's how I trade gold. I like to mostly day trade it, so I trade NUGT and DUST. All right, we looked at the nugget chart. Dust has been sold way the heck down. Let me take a look here for our sectors as well, because I only got a few minutes left here. I'm keeping dust on the radar. It's still in dead cat bounce territory, but if it gets back over 10, if it climbs over 10, I'm in, right? If we look at our sectors, I don't see a lot of isolated strength in the sectors out there because the market sell-off recently. If we look at banking and finance or small caps, I'm not seeing any big moves up. Somebody had asked about sectors. Biotech has been pretty horrible. Banking and finance, not too good. One thing, here's a quick tip, a good trader's tip. Pay close attention to the VIX index. Your VIX is the volatility/fear index. And look at the height of the whole real body green candles, on Wednesday and Thursday. That's the FOMC, and that's Trump's tweet about the China trade war. Somebody had wisely asked me back on Wednesday, am I short-term bearish? I don't know if that was you, Jürgen, or somebody had asked me. I'm definitely a bear. I think the market's going to drop like a frickin' rock, so I'm short the market. But I'm still trading isolated small share swing trades and things that are going up, like Twitter. Looks like it may be going up, so I'll likely put on a Twitter trade. I'm not in Twitter yet, waiting for clarity from the market. But this is our VIX, and our VIX is back up near 1819, so it's finally back over the 15. That's the magic number that the street was looking for, was a VIX recovery over the 15. At least word to the wise, if you talk with institutional traders and the Wall Street guys and the prop shops and you've got the connections I have. You want to know where the money flow is. Where's the big money going in or out? Gold is absolutely worth trading, and is selling the market by trading the inverse ETFs. So I'm looking for plays in, and I'm currently trading TVIX. And I teach my traders how to do that in the live trading room every single day and in my swing scans events. Also, one thing that I just added to swing scans as a bonus is the pot stock coverage. So every single week you get my top 3 cannabis picks plus specific entries for where to trade them. And those are usually, it's APHA. That was the gapper yesterday, right? I'm not going to pay up here because it may drop back down there and then bounce. So I'm leaving that alone. But I bought myself a little Tilray yesterday. Under $1,000 worth, small size trade. But there was a nice biggest green in over a month day in Tilray yesterday. And Cron and CGC and the rest of it. Anyway, maybe good for bounce, right? So I do provide picks for our swing traders in swing scans, 3 a week. I was going to launch a separate cannabis advisory service, but I really don't have time. I'm trying to consolidate all my services into one type of a thing so that it's kind of like an all-you-can-eat Vegas buffet instead of trying to run all these different services in isolation. It makes it easier from a workload standpoint and a better value for all of you if I can give you all-in-one kind of access. So I'm migrating the business toward that model where for one price you get all of the alert services versus having to buy them all individually. So one of my traders, Louise, had asked for that earlier this year, so it's finally there. All right, we're going to wrap up. I got just a couple of minutes. Let me know if any questions. I hope it's been quick and to the point. Some intelligent thinking. Hey, Mukesh, I just bought some pot stocks yesterday after the close, but just small, under 1,000, like 20, 30 shares or whatnot, trades for 3 different instruments. So that's one sector that the pot stocks and gold, okay, those are 2 long sectors. Remember I said that next week. So gold and the pot stocks may do well in a market of high volatility and likely continued selling pressure. So the 3 sectors to focus on are the inverse ETFs, the things that go up when the market goes down, like TVIX and SQQQ and whatnot. Gold, because gold typically goes up when the market goes down. It's been on a rally the last several weeks. And the pot stocks are also well worth paying attention to for longer term swings. Now the pot stocks I want to trade as with the inverse ETFs for longer term swings, even position up to 3 or 4 month type of trades, because I think there's a lot of upside potential. Or if you trade options, that's one thing that I'm going to continue to expand coverage for and introduce coverage for options traders in swing scans as another bonus. Let me ask a quick question. For all of your options traders, for my swing trading picks, and you've seen how well they've worked out, even the free ones I give away here. I give away a few okay free ones here each week. My much, much better charts are reserved for my paid members, of course. So they get much more, many more alerts and much better charts, right? But I give you guys here for free a few good ones. But that's something that we're covering as well. Question from Bill, do my aftermarket trades get in between the bid and ask spread, or do I offer the ask? I just hit the ask because I'm not trading any size. It's usually under 50 shares, so I don't care if I pay up a dime on 30 shares, so I just hit the ask. Actually, I put a limit order in about a nickel above the ask, so I happily pay what the market wants for small size. I just want to get a foothold, so if I'm doing a under 100 share trade, I don't mind a nickel slippage, so I don't pay in the spread. Now, when I'm trading larger size, like 200, 300, 400 shares for day trades, I always put in a buy stop order within usually 2 cents. Unless it's a higher priced instrument with a big 5 to 7 cent spread, then of course I use maybe a 5 cent buy stop limit order. So like buy stop 30.20, limit 30.20, well, 22 for a $30 stock. If it's a $60 stock, I might use, say, buy stop 60.5, limit 60.55. So that way it gets me in there. But yeah, that's an important distinction. It doesn't, so paying the ask doesn't matter if you're trading small size because the money isn't any significant. But if you're trading over a few hundred shares, you don't want to try and buy on the bid. You don't want to be cheap like that. But you do want to use a buy stop order with a limit, especially true if you're trading odd lots. Increments of, like if you're doing 70 or 160 shares or 250 shares, the 100 blocks will fill it correctly, but you can get screwed by the market maker if you're trading odd lots or things other than 100 share increments because they don't have to honor, you get more slippage, they don't have to honor the price. It doesn't hit as cleanly a fill if you're using odd lot trades. So make sure you're using buy stop limit orders. Okay, and ask your broker for help with that, and they'll say, oh yeah, he's right. Yeah. Anyway, that's a word to the wise. All right, I got to run. I got swing scans coming up in just a minute. Hey, sure thing, Bill. Yeah, low volume on the SPX on the sell-off, so we may get a little bounce out of the market early next week. Wouldn't surprise me at all. Nothing surprises me anymore, right? All the thousands of trades I've done this year, and all the money that you make as a trader is all focused on being able to be in the right place at the right time. And we do join the All Access Pass. Just a quick P&L proof here for those of you who are just logging in or something or logged in recently. I did 206 trades Thursday and Friday. That's my month to date as of this month, right, for my Fidelity account. So I have been very aggressively trading, right? That's on average 103 trades a day. A lot more on Thursday. I think that's the month. I think I did something like 60 odd trades yesterday and 140 on Thursday. And I've done just under 7,000 trades so far this year. And I've got the commission proof to pay for it, what I paid. Think of how much money one can make when you trade, as I said, the law of large numbers. You're trying to get yourself as many trades as possible to make money with. Now, you don't have to go bananas and trade as much as I do. This is what I do for a living. But even if you're a casual hobbyist or a casual amateur trying to learn how to trade, like Sosnoff says, trade small, trade often. That's why. You want to give yourself as many chances to make money as you can. You got to be right a very high percentage of the time. The reason is you got to be right a ridiculously high percentage of the time if you only do a few trades. If you do a lot more trades with super tight stops, you can incrementally do a whole lot better as a trader. So I'm the guy to teach you how to do that. If you have not yet joined the All Access Pass, do that before I raise the rates. Like a valuable stock whose price is going up, like Twitter lately. Do be sure to register for that. The price goes up to $14.95 tomorrow evening or Monday morning, whatever. So do register for the All Access Pass. It's at trademastery.com. All Access. You get 400 hours of training with me, which is a lot. And what's more valuable than these Saturday sessions is I provide specific entry prices every single day or 6 days a week in the live room Monday through Friday and swing scans on Saturday. So that'll be about going to do it. Good point, Clark. Thanks, man. All right, I'm out. See you guys next time. Do send a support ticket in. Hey, Jeff, thanks for letting me know. Hey, Jeff, if you would, send me a support ticket. So go to one of my sites. And by the way, you guys, always 100%, especially if you're not getting my emails, use the Zendesk support tab, okay? That's the help tab at the lower right. All right, I got to run. Let's see, Wendy sent in. Let me take a note of that email, Jeff, and I'll get you taken care of too. But anyway, to contact me or get help with anything, do be sure to use the help tab at the lower right of any of my websites.